Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be. Good morning, everybody. Well, it is Wednesday. Did you have fun yesterday? I hope those of you that traded that whole mess yesterday had fun with it, because what a man. Can you believe this stuff? Come on over here. Look at the charts with me here, man. This was just a total zoo in the S&P 500. Powell came out in the speech. He was still a little bit dovish. So we had a big jump, but then, you know, he also said some things that were hawkish, and so I guess they decided to sell it off of that. And then, you know, and it actually is sold pretty hard. And then going into the close, we had a panic bid again. Absolutely bonkers. Just crazy stuff. Now, coming over here into the Treasuries, Treasuries did not do the same thing. Well, I mean, they did spike up and down, but now they're just down. And here this morning, we're getting another impulse of selling, although it's looking to be short-lived so far. So yeah, the markets are in an interesting spot, to say the least. Coming over here to oil, we've got a decent rally forming here in oil. Let's see if they can get above $80 again. Natural gas still down there, but hey, that's okay. That's okay. Natural gas down is good. Gold and silver still just kind of meandering after taking that big hit last Friday. And copper's seen a little bit of a bid, so things may be improving in the copper markets. And then we've got the dollar. The dollar coming back down below 103 at points, but they're kind of fighting it out. The dollar still seems to be like the critical asset to watch that is like everything else is taking its cues from. And here we got Bitcoin. Bitcoin also doing all of the wild stuff by giving up most of its gains here this morning. So that's kind of where we're at. Now today, come back over here. On the calendar, we have a bunch of Fed speakers this morning. So at 7:15, Fed's Williams. At 7:30, Fed's Cook. 8 o'clock, ECB's Not. 8 o'clock, also Barr and Bostic. And then at 10 o'clock, we have wholesale inventories. So not too much in the way of economic news, but a huge slate of Federal Reserve speakers. And seeing that many people slated to speak here this morning is, you know, that's got to be intentional. So I don't know. Let's see if I can come over here. Okay. So Williams, due to discuss the economic outlook in an interview conducted by Nick Timmerose, oh my, at the Wall Street Journal's CFO Summit in New York. Okay, so that one's big. Barr, due to speak about economic mobility at an event hosted by Tougaloo College in Mississippi. Audience questions expected, so that one maybe not as big of a deal, but we probably need to keep an eye on it. And I don't have the Barr and Bostic one on here, so I don't know what that is about. They're not on the Forex Factory. I also have Waller speaking at 11:45. So it kind of looks like we're gonna get everybody's opinions here, and we'll see if they're like any different from Powell's. I don't know. It's gonna be an interesting one. So what do we do over here in the Treasuries? Well, I think you want to sell them and suffer that they're just giving you an awful setup to do it. So I think that I need to just kind of sit on my hands for a little bit. Let's make sure that we have our news squawk and all that stuff up and going. Oh, I have a bunch of all these tabs open that I don't need. Don't need you, don't need you, don't need you, don't need you. Before we get too deep into anything, let's check Twitter and all of that, yeah? Wells Fargo's mail, the favorable risk reward for bank stock investments is among the best in 2 decades based on regressions of ROTE to price to tangible book, implying banks should be valued by close to a 1/5 higher, including BAC and GS. Interesting call. Squawk Box, Steve Leishman, Chair Jay Powell told investors yesterday that inflation is starting to ease, but interest rates are likely to climb higher, says Steve Leishman. Morning, I'll be kind and help someone learn what banning books means. Hint, it doesn't mean removing them from the 3rd grade curriculum. That's right. Oh, that one drives me so crazy. Is like they say, well, this shouldn't be part of the children's curriculum, and then they're banning books. No, we're just listen. There's only so much time at school. What do you choose to work on? Okay, teach my kids typing and not some of the trash they want them to read. I don't know. Actually, my school system is really good. They did teach them how to type. Okay. But when I made a TikTok. Where I pointed out that when I first got married, my kids were peck typing. Well, they have since remedied that, and they are getting some education in school. So, yeah. But you know, it really made me think about like, okay, I don't feel like when I was in school we wasted time, except for maybe on the English, because we learned like the same English concepts over and over again. So our English skills weren't so good because we were like being held back, you know? Anyways, weird tangent, but on my mind. Joseph Wang promoting a ETF from unusual whales. Oh wait, what? There's one that follows investments by Democrats and one that follows investments by Republican? What? Oh, that is interesting. Oh, that's really interesting. Jeffrey Gundlach, garbage fees filing time in the State of the Union address in the current geopolitical context is worrisome. I'm not quite sure what he's referring to by that. Yeah, the Treasuries kind of made us want to think that they were gonna like push down really hard again, but they just seem to be meandering at the moment. If not going outright to the upside. In fact, you got a click there. What's that? Some offers pulling. Interesting. Yeah, so did any of you guys watch the State of the Union address? Oh, wait, before we go into that, Ismail asked a question, didn't he? I was about to ask if you use volume profile, but I'm guessing you do because, yeah. I do put it on the charts, but, you know, I don't know if it's more than just a comfort thing at this point. Because you notice that I didn't come in here and look at it and say, well, this price means a lot because it has the point of control, blah, blah, blah. Well, you know why that is? Because it sat there all morning. Doesn't mean anything. Doesn't mean that we're likely to go back up to this point, and because we didn't get there, we're going to have this huge... None of that means shit, right? But it does kind of give you a good idea of like what kind of a day it was, you know? So that's why I kind of keep it up there. Like the thing is that I want to watch the volume profile as it develops, right? And so if I can understand why it developed the way that it did, that kind of helps me remember what the action was. So I think that's where it has its primary use. But everybody wants to abuse it, right? They think that the volume profile identifies prices that are significant and will be significant in the future, and it does not do that. And there's a lot of things, you know, and like people will make statistics and stuff like that, but I think that often they misunderstand why those statistics are the way that they are, right? Like I can come in and I can say we have a 70% chance of touching the previous day's point of control, or whatever the percentage chance is. Well, that's not because that point of control is a special price or anything. That's just volatility. So that's just because volatility clusters, right? So that's the sort of thing that I'm talking about. I really think one of the videos that I think we're gonna make. Oh my gosh, I don't know. So let's do a poll. Let's do a poll. I want to see what you guys are most interested in. What's the next video going to be? Start a poll. Okay, what video should Seth make next? Bitcoin sucks. Why you suck at day trading. The problem with a volume profile. Ask your community. Because so here's the thing. I think it's because of our Ninja Trader video is kind of boosting the channel again. That video like really increased the channel's numbers. And so now I'm being inundated by people on my email looking to promote things and stuff. I tell you what, there are some other there are people that try and give me shit for having affiliate links in my profile. Like, yes, I promote products that I like and use and I think are valuable to my audience, and I have absolutely no qualms with benefiting from notifying people of good products, right? For every thing for every link that is in my video description, there's probably 100 products, services, and companies that have asked me to do something like that, and I've flat out told no. I'm not even kidding. Like at this point, it's literally hundreds. Especially the worst was in 2021. Every stupid little cryptocurrency scam was in there. Like, maybe I should have gone for it. I don't know if it's. I guess it'd be up to you if you guys wanted to push that sort of stuff, but. All of the crypto scams, I was getting emails about all of these. Like you go in CoffeeZilla's channel, and he'll talk about, oh, here's an influencer, they pushed this rug pull and this rug pull and this one and all that sort of stuff, right? All of these projects that they promoted. I got emails for all that shit, and I most of the time I didn't even respond to them. Affiliate links are fine. It's not like you're promoting something totally. Yeah, totally. I'm really careful about what I promote, right? I promote the products that I use and that I think are going to be the most useful to my audience, right? Anyways, so what's happening is I'm starting to get those emails again, and I'm starting to get those emails again about cryptocurrency stuff. Like, I'm actually having. What appeared to me to be relatively large exchanges trying to talk to me. And I just straight up tell them no, right? So I got one this morning. They were like, oh, we've been watching your TikTok videos. We'd like to talk. And it's like, it's from a Gmail address. They don't say anything about what their product is. So I have no clue who the company is or anything. It's like, I'm not going to talk to you if I can't I don't even know if I want to respond if you're not gonna like give me some idea of who you are first, right? I'm not gonna waste my time. Man, if I said yes to every person between that and freaking job recruiters, oh my gosh, man. And on LinkedIn, it's ramping up again. It was like there was a lull because of the end of the year, but now that it's February, like they're ramping up again, and I get recruiter people every day, and like I feel bad because I'm like, well, like maybe I could go and they would maybe pay me more. I mean, they don't say how much they're willing to pay, but like if I responded to every single one of those, I would and set up a meeting with every single one of those, I would never have any time for myself. Like there's just too many people. It's zany. So I'm like struggling, and the problem that I have is that like I don't like just ignoring people. You know what I mean? Because usually what happens is they'll send, if you ignore them, they send another email. Right? So I'm struggling with what to do about that. So I'm thinking I would like to make that video about why Bitcoin is trash. I'm not just saying I don't like Bitcoin or I don't think it's going to go up in the future or something like that. No, I'm just saying it is objectively bad at anything that could possibly be productive in society, and it is leeching off productivity from things that would be more beneficial to society. That's what it's doing. It is just bad at what it does. And the problem that I'm seeing here is that the markets are kind of looking a little bit risk on right now. I mean, who knows? It could just like totally flip today. I really think that the situation right now is that the pain trade is to the upside, and the stock market kind of wants to go higher because people are underinvested, but they could very easily slip into this mode where things turn into a strong bear market again. Okay. It's about, if you just got the right economic news or whatever the deal is, right? Could slip into that very easily. So in that scenario, it seems to me that Bitcoin is benefiting from the risk on trade. So I think that it's going to go again. And it's looking like, even though I don't think that the interest among the public is there, it looks like that these guys in Bitcoin have really gotten good at what they do and really know how to play the game, and will try and pump Bitcoin up again and to garner the public attention and so forth again. So I'm only going to get more and more cryptocurrency solicitors. So I'm feeling like I should go and make the video now why Bitcoin sucks to ward them off. You know what I mean? That's what. So I was waking up this morning and I read those emails and I was sitting in the shower, and maybe that's why I was a little bit late today. I don't know. I'm always like, I think too long in the shower, man. But I just had this strong desire to make a video about why Bitcoin sucks. But then I also want to make this video about why you suck at day trading. I think that'd be a good video. The problem with volume profile, I think that one would be one that you guys would be really interested in. So which one do we do first? Well, there's 6 of you so far, and it looks like 4 of you said the problem with volume profile, and 2 of you said why you suck at day trading. But none of you are interested in a video about why Bitcoin sucks. Maybe I should make the Bitcoin sucks video just to spite you. No. Let's let it marinate a little bit. We get like, when we've got like 20, 30 votes, then maybe we'll look at it. So anyways, that's my spill this morning. This is all about Seth's emotional state this morning. So did any of you watch the Statement of the Union? I didn't watch it live again, but I watched clips and highlights and so forth. And the clips that I saw were quite alarming to me. Did you see this thing? Wait, let me go find the video. Let's see here. I think Red State had good links for the videos. Yeah. Let's see here. Yeah, this is it right here. Let me show you this. We'll make it super big. So, I want you to look at the guy in the background to the right. Okay, the Speaker of the House. Sorry, what is his name? McCarthy. Look at his face. Okay, I think it speaks a lot to like what's going on here. Or wait, unmute it. Oh, come on, Twitter. Don't be like that. Man, sometimes.
Instead of making the wealthy pay their fair share, some Republicans want
Look at his
Medicare
face.
Security to sunset. I'm not saying it's a majority.
Look at his face. So, like, here's the thing. Here's the thing that is going on in Congress that you need to realize, okay? Like, we are headed towards a government shutdown again. And this would be, what, the fourth time, I think? And almost every time that we've done this the past three times, it's kind of hurt Republicans, okay? Like, Republicans did not get a big boost in the public from shutting the government down, right? So the Republicans want to do it again. And McCarthy has been saying, okay, guys, let the adults handle this. Don't get too excited. Don't be childish. And maybe we can actually, get something this time and get something done. And so don't don't do anything crazy at the Statement of the Union or any of that kind of stuff, because that doesn't help us in our negotiating position, etc., 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 right? That's what McCarthy is basically saying to his caucus right now. Here's the thing that I don't think that McCarthy is realizing here, okay, is that Biden is childish, okay? I get he's like the dark Brandon meme. That's the big popular thing on the left. They're all like super excited because, oh, they love that Joe Biden is being so aggressive and so left. And it's just this brilliant strategy to go and provoke the right and all of this sort of thing, right? No, it's not part of some brilliant strategy, guys. Joe Biden can't help it. Joe Biden cannot help it. He has always been this kind of nasty, petty, hyper-partisan guy, and he can't help but say, okay, so somebody is like messaging me here. Hold on just a second.
ECB's Guindos says inflation's still a reason for concern. That's from Swedeutsch.
I was having problems with my email. There, we'll do that. Sorry about that. Yeah. So here, McCarthy is telling his caucus to like calm down, right? And then Joe Biden comes in and does everything he can to provoke them. And you know what? I think that the Republicans have every right to be angry about what he said because it really is a misleading and unfair characterization of the Republican position. The Republicans don't want to, quote, cut Medicare. That implies that they think that the Republicans want to completely get rid of Medicare or cut the benefits so that it's, you don't get as much money. I mean, look, they're going to have to adjust Medicare in some way. I don't know what those adjustments actually would be. I suppose you could call them cuts from that perspective. But Republicans don't view it as cutting Medicare. They view it as saving Medicare. That's what they say. They would say, we're saving Medicare because if we do nothing, it will be bankrupt in 10 years. Right? So they have every right to be angry about it.
Inflation back to 2%.
So I don't know. When I got on Reddit, everybody on Reddit was like fawning over what Joe Biden was saying, which I think is just so silly. Like when it was Obama, I was like, okay, like I'm transparent. But now I'm just like, you guys are just doing this because you're hyper partisan and you think that it's gonna help you. If you all show this solidarity like you like your guy and stuff like that. But the problem is that we're headed for a government shutdown. So did that speech help or hurt the chances of avoiding a shutdown? What do you think? Because I think that if I had a way to bet today that we were going to have a government shutdown, actually, you know what? I bet you there is a way for me to do it. Let's go look. I think I want to bet that there will be a government shutdown at this point because after that statement of the Union address, I just don't see how there's any other way. I don't see how it's going to go any other way. So let's see if we can do predictit.org. Treasury is coming off of the highs there. There's got to be a shutdown market, right? Markets. Will Biden be impeached? No. Kamala Harris. Oh, this. I'm surprised that Kamala Harris 2024 Democratic ticket is still 71%. Yes. Will Biden resign during his first term? No.
ECB's Gwyndos says, I wouldn't exclude further rate hikes after March.
Congress, maybe. Predict it. You're letting me down here. You're letting me down. There should be a market that should be like, will there be a government shutdown before the end of 2023? That's what it should be. Because I think there will be. I think there will be. Okay, so just taking a look here. I want to know, is the Treasury acting correlated with the Japanese yen here? It looks like yes, they are. Did you see the first late? Yeah, so when I first saw that, I was like super shocked, but everybody told me that it was just a bad perspective and that they actually kissed on the cheek. So I'm going to give them, it's just too weird otherwise. I'm going to give them the benefit of the doubt and say that they were just kissing on the cheek. Yep. But for, I'm just going to file that one away in the back of my head if I ever run for office, which I don't think I would, but if it ever happened, or maybe I'm maybe I'm advising somebody that will run for office, just don't kiss people on the cheek. You could do a hug. A hug is probably the most intimate you should get. Or they swing, I mean, if it really was like a straight up kiss on the lips, that would be really alarming to me. Like the thing that I thought was funny, that people were saying was that like, Joe Biden's wife was more into that kiss than when she kisses Joe Biden. I thought that was funny. But I'm pretty sure that it was just a bad perspective. Pretty sure that it was just a bad perspective. You know what, though? Let's come back over here. The thing that I thought was weird was I didn't really get a whole lot of analysis or synopsis last night from the major outlets. And then this morning I wake up and it's not on there. Like Zero Hedge, I couldn't even find the Zero Hedge story about it anymore. Like, look, okay, Navy releases first images of Chinese surveillance balloon debris. That'll be interesting. Like they still have the Powell post-mortem up in here. But like, look, where is the story about Biden's speech? I think it's there. I mean, I think that they had a thread about it, or like a live thread, but I don't, like, it's not there. Where is it? What's going on? I guess it's too early. I guess it's too early in the day, and maybe there'll be more political stories about it later. Let's go to Politico. Let's see what Politico says about it, because I thought that that was like, okay, there you go. The state of Biden's union with a GOP Congress, it's tense. I would say that was like the most tense and divisive statement of the union address I've seen. There you go. Republicans turn themselves into props for Biden. So like the whole thing was the way that the left is portraying that interaction is that they're saying, oh, Biden just got all of the Republicans on record saying that they don't want to cut Medicare. Yes, because they don't want to cut. They don't want to get rid of Medicare. Listen, there are libertarians out there that want to get rid of that. Let's not pretend that they aren't out there, but that is not the mainstream GOP position, okay? I'm more than I love to argue with libertarians, okay? I mean, because they're kind of on my side, but I love arguing with libertarians just as much as I love arguing with Democrats, because they believe so many things that are just demonstrably false. Anyways, I guess they have a story about it, but I don't know if we gain too much insight from reading it, so I'm just gonna let's look at these images here first. There's the balloon, but they said that the package was like a school bus. Where's the school bus? Okay, whatever, not that interesting. What's your thoughts on tick trading, like in and out scalps for a few ticks? So I think that there can definitely be opportunities to grab a tick out of there. In most markets, well, not in most markets, but like if you're going to do it in ES, it probably has to be more than one tick. But you can still do it in ZN, and you'll see me occasionally I will take a scalp where it's just one tick. By and large, though, I feel that the cues and the speed and everything are as such that is not really as advantageous of a trade as it appears. And I would not spend all of my time focusing on like a one tick trade like that. I think that in the long run, you're just kind of holding yourself. And unless you have some sort of a really inefficient market where you have a really effective arbitrage trade, right? If you can find an arbitrage trade, then go for it. But it's probably not going to happen like taking it a tick in the 10-year treasury, unfortunately. And the other thing that I see people do off of this, one of the mistakes that I see it lead to is people taking tons and tons and tons of trades, you know? So like I'll always see these guys post on Reddit and they're like, oh, I'm doing really good. And they'll show 1 day's worth of results and they took like 80 trades in a day. I'm telling you, like you're going to go in on 1 day and do well doing that and think that you got it figured out. And then the next day you're going to come in and get slaughtered. So those kinds of trades have very, very fat tails. Unless it's truly like an arbitrage trade, right? And that's the other thing is like if I'm doing it in the treasury and I have like literally a 1 tick target and a 1 tick stop, you know, it's really easy to hit the 1 tick stop. And so I'm going to have to use a volume stop. And then if I use the volume stop, then I'm probably actually going to stop out at -2 ticks instead, right? So you have to kind of consider those things. Not saying that you can't work it out, but I don't believe it's the most fertile ground, right? In the end, there is more opportunity out there in the informational inefficiency markets. Keep an eye out for them, but ultimately I would be more focused on informational inefficiencies. Let's just come back over here real quick to see, I'll scroll down on Twitter and then not scroll back up to the top, so when I come back I'm not actually seeing the latest stuff. Got it. Well, that was usually you guys don't, when I say something like that, you guys don't just go like, okay, I understand. That sounds like it. Usually you're like, oh, but why don't you like my trade? I totally want to do it. I mean, that's what I do when I propose a thing and then like Akshay is like, nah, that's a bad idea. Like, but why not? Come on. I know. I do know a couple of people that are doing that, but they're like doing it on NASDAQ, right? And I don't know if they're actually doing a good job with it. You know, like I've seen like bursts of success with it, but I don't know if it's actually working out for them long term. This Treasury, like there's still kind of giving me like hints that they are going to move up. The Treasury has actually seen a reasonable amount of buying here, but it's not going anywhere. So that's kind of the first in a long time that I'm seeing buying and it's not really moving the needle, you know? So we should be cautious. The cumulative delta is up. The price is up, but I'd say the price is more range bound than anything. So kind of doing a fuzzy thing, but we should do fuzzy. So yesterday I was doing stuff with detecting spam and so forth. And so I was using fuzzy logic, which is basically like,
Eastern time, New York.
Okay,
Williams is in.
I can come in and I can say these two words are really similar, right? How do you do that programmatically? Well, you can say like how similar are the letters to each other and like what's the distance between them and all that sort of thing, and then you get a score out about how similar they are, right? I really would like to write an algorithm that uses that kind of a logic, right? That it's not a straight yes you buy it, no you don't buy it. It's like there's a couple of different factors and they all factor into this kind of fuzzy this score, that if the score is high enough you take the trade or you don't take the trade, because that's much more similar to the way that I approach it, right? Is that I don't have straight thresholds that make me want to get in. It's like I'm watching a bunch of different things and I need to have all of those different things kind of, you know, I have to see enough of each of those things in it to make me think that it's a high probability trade. So like right now, I don't know if I have a reason to think that they're going to buy it here, other than like mean reversion. It seems like that the trend is down and that interest rates are likely to continue increasing. But I don't know if there's like any reason for anybody to take like a strong trade this morning. So then the next thing is I come in and I look at cumulative delta and I see that cumulative delta is up by about 10,000 contracts. And there's correlation with the Japanese yen, but the Japanese yen isn't really coming back up to the upside. So Japanese yen maybe drove that downside move, but it doesn't seem to be a factor now. So the only thing that I really got going for the buy, the treasuries here, is the cumulative delta, right? So that's not enough for me to really take a trade. It's fuzzy. It's fuzzy logic. I want to know, so you ever get those rice cookers that use fuzzy logic? How do those actually work, I wonder? So, like, how does it tell? It must be like the weight of it and how much it's changed and like how much it is changing, and I don't know, maybe it's got like a moisture. I don't know. How does it do it? How does it do that? Must have a moisture sensor of some sort, right? Maybe in the lid? I don't know. How do those work? I need to get a new one. My wife has been cooking with that. It broke, and my wife has been cooking it rice on the stove. Yeah, we should fix that. I need to get like a pad for my chair here. I keep wanting to rest my elbow over here, and that's a bad spot to rest my elbow. Oh, you know, this is a good point there. What, are we seeing changes in the curve? No, the curve is actually unusually unmoved this morning. Well, with a Fed speaker in 15 minutes, I think that Feds Williams' speech or interview, because that's with Nick Timiraos, right? That's going to be... Oh, we should watch that if we can, actually. Let's see here. Maybe he posted an event link earlier today. Let's see. So that's in 5 minutes. No, I don't see it. Nick, we want to watch. We want to watch. Nick, if you're watching, you need to post the link to the live stream. Oh, now that is interesting. So, no, it's the Wall Street Journal. Oh, hey, Trading Bunny, I haven't seen you in a while. How are you doing? So like you were really active for a while and you disappeared, and I'm like, so that's either really good or really bad.
Williams interviewed at a Wall Street Journal live event in New York.
I do that with other people. There was somebody else. Who was it? There was somebody else that was kind of new, and I hadn't heard from them in a bit. Ismael is our new guy, and he's been asking lots of really good questions. I have high expectations of you. All of you. You gotta do well and make me look good. If you guys aren't doing, like, that's the thing, is that if you guys don't benefit from this stream and become better traders from watching this stream, then like everything that I'm doing is pointless, right? Oh, hey, they breached new highs. There we go. Ah, your mom has needed more attention. I'm really wondering, like, are all of us millennials gonna end up having to care for our parents? I really do wonder. I wouldn't have any problems with taking care of my parents, but I told my dad that I was not gonna buy a crane for my house. I was not gonna install a $15,000 crane in my house, so. So I was gonna say, the poll, what video should Seth make next? Okay, at least one of you said we should make a video about why Bitcoin sucks, but you guys are more interested in the problem with volume profile than you are with why you suck at day trading. That's interesting. I wonder, you know, so if we're gonna make that video, I've already kind of given spiels about that before. I think that one, we would probably need to do some stats. We'd probably need to do some stats. And I think that we would also have to talk about the proponents of it. Not Futures Trader 71, that's but like the guy that wrote the Mind Over Markets book. What is his name again? Jim Dalton. Hmm. See, people have told me, I've more than once. Oh, Johanny, welcome. Yeah. By the way, just know we are going to have Fed speaker here in a moment. So
from the Wall Street Journal with John Williams.
As soon as I say that, my news squawk goes off and reminds us too. Anyways, somebody told me that Jim Dalton gave up on it and stopped trading it. And basically decided that it didn't work, but people kept demanding education and so forth from it, and so he came back and started making education from it. But I've never been able to find any kind of corroborating evidence for that. Which data provider has more than 10 levels on the bond? So if you use Rhythmic as your data provider, they show you every level. They give you the full book. What is his full name? Jim Dalton. James F. Dalton? So who is James J. Dalton? There I have a SEC. James J. Dalton was founder of SecureAlert and served as director from 2001 to 2009 and is a resident of Park City, Utah. Oh, interesting. Stadelmeyer couldn't make it work? Yeah, that's right. Was that the other guy? Well, he uses market profile, not volume, but that's kind of the whole thing, is that basically what they did was they took all of the market profile ideas and just applied them to volume profiles, right? So I don't know. If I make the video about the problem with volume profile, what it's really going to be is it's going to be a takedown of auction theory. It's essentially what it's going to be. I'm basically going to say auction theory was an interesting theory. It was a useful theory, but ultimately it's wrong. Dalton still only talks about market profile. Interesting. That will trigger many. It will trigger many people, but it's the fucking truth, man. Eric T. Jones. No, it was Stoudemire was with a different book, I think. It wasn't Mind Over Markets. It let's come back over here. Wasn't markets and profile. He made another book. It was like maybe it was markets and profile. I always compare developing value area versus the ending value area thoroughly through the day. It changes. So when you look back, yes, that is yesterday's profile, but it wasn't yesterday's profile for much of the day. I don't use it much either. The developing value area is just much different than the final. He also only trades futures options and kills it, apparently. Who, Dalton does? What is Stoudemire's full name? Because I can't find it from my searches. How do you spell his name?
At 9:30 a.m. Eastern Time, we expect comments from Fed's Cook, who takes part in a moderated discussion hosted by the Joint.
Did you spell it correctly that first time?
Text isn't expected.
Stoudemire? J. Peter Stoudemire?
German.
No, I definitely, yeah, okay.
Says the EU response to US subsidies.
It didn't quite look right to me.
And will be done before the next EU summit in March.
Peter J. Stoudemire. Oh, wait. Market profile. There's a Wikipedia article about market profile. Market profile is an intraday charting technique devised by J. Peter Stoudemire, a trader at the Chicago Board of Trade. Stoudemire was seeking a way to determine and evaluate market profile as it developed in the day time frame. The concept was to display price on a vertical axis against time on the horizon, and the ensuing graphic generally is a bell-shaped pattern at the middle prices, with activity trailing off and volume diminished at the extreme higher and lower prices. In this structure, he recognized the normal Gaussian distribution he had been introduced to in college statistics. The market profile graphic was introduced to the public in 1985 as part of a CBOT product. All trade was blah 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 blah. Promotional material says the profile is the link between the CBOT data and the market. The profile graphic is used to tell what the market is doing. As part of the data display connection in CBOT-MP1, the price of the peak cleared volume is identified as a point of control. Blah, 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 blah. In 1987, Professor Thomas P. Drinka of Western Illinois University launched the first market profile course. A new and expanded market profile manual was released in 1991.
Says the labor market is very strong.
In the period 1985 to 1991, the profile concept caught on with the public. In early 1986, Stottlemyre and Kevin Coy started Market Logic School to teach profile trading. Around the same time, the CBOT gave up on marketing the liquidity data bank directly to the public. Public access to tick data increased greatly so that profiles could be constructed at real intraday time. Where are you getting all this information from? On Wikipedia, that's interesting. It's becoming increasingly clear that bit trading's days were numbered. By 1991, it was obvious that the focus on the profile technology and less on the database used to support the calculation sensed the change in emphasis. Limitations on market profile. Primary condition is for normal equilibrium distribution. The market is not in equilibrium. There is no valid point of control or standard deviation. But except for that, it's not that it's in equilibrium. See, that's like the whole thing is that like the basis behind the ideas is wrong. Useful, but wrong. The time which is spent on individual prices does not necessarily imply that the same amount of volume took place there. For more precise results, it is sometimes advisable to use volume profile, which is based purely on volume and price and does not take time into account at all. Ah, you have a French speaker in here. I wish I spoke French.
US for comprehensive trade agreement with the EU.
I am
interest in climate
new. What does site? Oh, I think
Williams says peak rate of 5% to 5.25% is still a reasonable view.
C'est passé la session in général? I don't know. I don't know. I'm not catching too much movement from Williams so far. How do you work your session? So what I'm going to do is I'm going to look for an informational inefficiency, something that I know that's not being correctly factored into the markets. For instance, like that there's a bunch of Federal Reserve speakers speaking today.
There's no text expected.
And then based on that, I will try and determine a bias for where I think it's going to go that session. Today, I don't really have a strong bias, so I'm not too focused on what it's doing. I don't know if I'll actually take a trade. Then I'm going to watch the order flow and the correlations and volatility to see if they are in line with my anticipation. And if I get a hint that they are, then I'll try and take a trade as early as I can. So right now we're kind of on hold because we don't have something.
Williams says there is a lot of uncertainty around inflation outlook.
Okay, so
says inflation could prove more persistent for certain reasons. Williams says maybe services prices stay elevated, and if that happens, we'll need higher rates.
Stottlemyre on markets. I have a lot of videos here on this channel that man, just watch my videos, especially my my ordered flow video series.
Williams says last year we had a long way to go on rates, and that needed big steps.
Well, now I can find stuff about Stottlemyre, but how do I find that he abandoned it?
Feds Williams says we are likely now closer to peak and can take smaller steps. Feds Williams says a 25 basis point rate hike seems the best option for now.
Okay, so he is saying 25 basis point rate hikes. Oh, wait, here is a CFTC thing about it. What's this?
Feds Williams says 25 basis point hikes give Fed flexibility. Feds Williams says if situation changes, we can...
Brendan is self-taught in the business of trading futures contracts and in particular the use of market profile method for viewing, organizing, and charting market data. Blah, 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 blah. Made false claims. Yeah, okay, so that's not it. Pax on Twitter traded with him? Who's that? Twitter Pax.
Shortly expecting comments from Fed's
Idle Mayor. Can you give me his exact Twitter handle?
Feds Williams says Fed policy is barely restrictive right now.
Gave up. Oh, that looks awfully familiar. Yeah, I'm following them.
Feds Williams says changes in financial conditions will also inform our policy outlook.
Well, they sure moved around a lot. It seems like
Feds Williams says broader
they're reacting to the play-by-play.
as being tighter.
Oh man. It's showing me a quote in here, but it's not on the page that I actually click on.
Feds Williams says our financial conditions seem broadly consistent with the Fed's outlook on policy.
There it is right there. Oh Lord, trading for Steidelmeyer was one of the most interesting and difficult periods of my career. I bet when I watch a video of him teaching how to pause and rewind about 800 times, plus take a book worth of notes. what you learned during working with Pete S. or more on or trade entry when you use it and when you don't. I guess I could ask him.
According to a poll, Canadian dollar is to rise 3.1% to 1.3 per USD in 1 year, matching a forecast in the January poll. And another poll said that Canadian dollar to be little changed.
Well, they're pushing down now.
Just to repeat there, another poll says that the Canadian dollar is to be little changed at 1.34 per USD in the 3 months.
It's on pretty low volume, but
35 in January survey.
well, okay, now they just breached the low.
Take a long-term view of data, but not get caught up in the day-to-day. Feds Williams says, "I'm seeing more positive signs globally about growth."
There's definitely a negative impulse coming in. Does it have legs, though?
Feds Williams says
he's still speaking.
The U.S. economy is also showing more resilience.
Yeah, at the moment, he's talking about how strong the economy is.
Fitzwilliams says demand in the US remains very strong.
Yeah, I'm gonna miss it.
Fitzwilliams says the housing sector is seeing a definite slowdown. Fitzwilliams says the demand in our economy is much stronger right now than in normal times.
What I'm looking, searching for words. I hate writing things sometimes. I'm so slow at writing. Well, there was some a pretty aggressive downside action, especially in the 5-year, but it is just loaded back up, and the equities are just ignoring it altogether and are buying right now. When I look at the current macroeconomic conditions, I see plenty of reasons to be bullish, and I don't necessarily see inflation at the moment getting out of control again, per se, right? But the problem I have is when I see the S&P 500 move like that so easily and so quickly, you got to be worried that the inflation is going to come back, which is to say that I see the current trajectory of things leading to inflation, even though we're not seeing it happen yet, right? This is where it comes back to this thing that, like, the Federal Reserve is mostly reactive to the data, and they're not able to really, like, consider their impact on the markets per se. Like, how do you game that out, that, like, what would have happened differently based on what they said and did, But it seems to me that there are some people at large institutions that have ways of sorting those things out,
but they have a way to go,
and that the Fed is behind on it. Oh, that's interesting. Well, somebody sent me a little thing on Twitter that somebody placed a trade. Somebody placed a $17 million bet on the Fed hiking to 6% by September,
excluding housing.
That's interesting. Thank you. Okay, so I sent Backstrader a message. We'll see if he responds. I don't know. Any other ideas, guys? Or should I just give up on this thread and see if the Hex Trader has anything for me? On any evidence that Steidelmeyer or Dalton kind of stopped using it? outside of your department. Dalton does have a room where he uses it live, doesn't he? Didn't trading schools .org
Williams says
Dalton,
rent-driven inflation
didn't they
ebbed
do a
over time.
maybe they didn't.
Williams
I haven't been to that place in a while. Let's go over there. Trading
strong.
schools.
Williams says the job market is extraordinarily tight right now.
They haven't posted anything since April. April of last year, so almost been a year. See, I see this comment from Bax Trader. Trading for Stylemeyer was one of the most interesting and difficult periods of my career. But I don't see anything more on that thread here. I'll give you guys the link and I'll put it in a document. What is this? Click. And they are here in the Treasuries. 1,000 lots at 12. Yeah, Jim Dalton definitely is like active.
I don't know how much the unemployment rate will rise.
Somebody is stacking offers. Ouch. That kind of action I'd normally be hesitant to get involved with, but given the situation, I think that it could be signaling a large player getting involved in the markets. How's your... it's been really good. I've been trading a lot better since I started using the micro yields. I think that they've done a lot for my trading. I really do. I mean, I think that the less pressure helps, but... And I don't know, maybe it's just because they're a smaller instrument and there's more inefficiencies in it or something, but I've had a lot of fun with the micro treasuries, and I think that you know, a lot of people are sleeping on it, you know. I think that the reasons that people are not interested in the treasuries are things that they shouldn't really be too concerned with. Yeah, it's no, it's $10 a basis point. So it's trades by 1/10 of a basis point is so a tick is $1. Tick is $1, but a basis point, remember, is 1/100 of a percentage point. So ZN is liquid. Yeah, look, did you see up there? So somebody fought it. I'm feeling really good about this now. So when we were up at 11.5, we started to see some stacking and pulling and so forth. At 12, somebody traded up through it and some of the orders pulled, but then ultimately we moved down. And as we moved down, I would say that the offers are relatively healthy, especially at 11. So It seems like somebody's doing something. And the volume here is starting to get much more aggressive. We're getting some of the largest changes in delta. Had a very bad 2 days because the context was not clear. Today is more readable. Well, like yesterday was just a zoo, man. I you know what? I didn't even wasn't even watching the markets when all that was going on. I was busy with doing stuff. Yeah, clearly seems wise. This is running, dude.
At 10 a.m. Eastern time, we get US wholesale inventories month over month. Prior 0.1%.
So
month over month.
It looks like I'm gonna get at least a basis point here.
From ECB's
so now we're back into the do I hold it? Do I try and let this run for a few days, sort of a thing? Maybe now that some of those bigger risk events are over, we can just
repeat that at 10 a.m.
Sit for higher yields. Okay, so there is some pushback at 0808 half.
Forecast 0.1% on the prior 0.1%. US
and we are getting some data. It's not like a huge economic news, but we do have wholesale inventories, bar and Bostic at the top of the hour, so in 10 minutes.
Fitzwilliams says labor force participation may grow with a strong economy.
So the question is ZN the majority of the time this liquid, or well, okay, so right now the liquidity is low in the 10-year. Oh, whoa, what's this stuff at 07? Was that there before? No, it was not. Okay, so 3000s is like more typical for the treasury market, right? 1500 is actually relatively low, and if you get below 1000, then it's like really bad. Like when it's below 1000, I often will just not trade it because of that alone.
And with
so
still elevated inflation.
But those bids, there's some strong bids.
Fed's Cook says inflation is still running too high, even though it has moderated.
That definitely gives me some pause here. Is it the same? It's not the same in the other ones. It's only in the 10-year. And look at the 5-year. The 5-year has like those targets all laid out below.
Fitzwilliams has concluded remarks.
Okay, Fitzwilliams is done speaking. Again, we are going to get more at the top of the hour. This event wasn't listed on my calendar, so I don't know what their context of them speaking is, but it sounds like they're going to be speaking together at an event or something. Morning B. Oh, it's coming back on me. Look for contracts executed, because you can have 2,000 like yesterday, but the contracts executed are very low, not like today. Yeah, I'd say overall today it's much tighter, right? Like we've had a net change in cumulative delta of 10,000 to the downside here, which is not that dramatic. That's a tiny trade, relatively speaking.
Fed's Cook says
I would say it was quite aggressive, but
stability and will need restrictive monetary policy for some time.
Fed's Cook is speaking now to all of the Fed guys are speaking, getting their say today, huh?
Prices, it will be hard to maintain maximum employment.
Yeah, Forex Live summarizing Williams, a candid performance from Williams, but didn't really tip his hand on rates. Lots of talk on the importance of data. Said dot plot views from December are still very reasonable. And also want to note that I'm not seeing any strong moves in the yield curve yet. I did see the Japanese yen did move lower with the treasuries, as did gold. S&P 500 giving up their initial gains.
At 10 a.m. Eastern Time, we get U.S. wholesale inventories month-over-month revised.
Well, we got to be careful about getting too excited in the E-mini because there's just so much random behavior over there. But I am really on the lookout over here for, you know, some sort of a flip where the sentiment just turns sour really quickly.
Fed Chair of Supervision, Barr, and Atlanta Fed President Bostic, who speak at an event discussing economic mobility hosted at Tougaloo College in Tougaloo. Text for Barr is to be determined and text for Bostic is not expected. A Q&A with the audience is. We also expect comments from ECB's Class, Not speaks on Euro area economic outlook in MNI webcast.
So this is going to be an interesting next 15 to 30 minutes here because we are going to have some Fed speakers. I'm not expecting them to say anything too incredible, but the markets are going to be watching what they say carefully. And the Treasury market looks like it just wants to sell in general. Every word they utter is incredible to the market. Yeah, especially here in the 5-year, I'm really interested to see if they test these big orders at 08 and 07. I think that you've got like a bunch of robots trying to trade Fed speakers again. You know, it seemed like we went through a period where, you know, the robots were hinging on every word that Donald Trump and Elon Musk said. And then like they got slaughtered. And after that happened, you didn't see as much of that stuff. And it kind of quieted down. And now it seems like over the last few months that that's kind of picked up again. It's like somebody develops a bot that does that stuff and it does really well. And then they over leverage themselves and get screwed. And then somebody else comes along and does it. That's just the theory, but yeah. And because now after the whole thing of inflation and everything, the second half of last year, right, it really quickly turned into like really dramatic moves based on the Federal Reserve really not saying anything significant at all, which really makes me think that it's robots. Curious. Let's recenter. It kind of looks like there's some selling pressure, but it's not breaking. Oh, look, somebody tried to smash the offer, but it held. Ooh. If that was just a normal trader trying to do a trade, that might be really good for the downside, but expansion will like it's just paused now. Okay, they took it, but it was 3,000 contracts.
1 minute remaining. I'll lead with US wholesale inventories month over month revised.
Okay. Fed's cook. Inflation is still running too high, even if it has moderated. But 2 ticks up. And S&P 500 pulling out a bull run again. About to press those highs. Wow.
10 seconds.
Okay, here comes the data. Wholesale inventories month over month. Expectations spot 1%. Previous spot 1%.
Series spot 1%.
And
Series
actual
1%
spot
as expected.
1%. So in line with expectations.
Still waiting for the wholesale sales.
Treasury gives up 2 ticks there. I don't know if that was related to the news or not, but that's got to be disappointing for the guys that just bought 4,000 contracts there.
Dynamics. I expect us to move to smaller steps, and keeping current pace of hikes into May could. Sorry, just repeat that. ECB's note says keeping current pace of hikes into May could well be needed if underlying inflation does not materially abate.
Okay, ECB not speaking hawkish here.
Neutral range. Forward-looking wage indicators confirm wage growth will increase further in 2023, and it will take some time before core inflation slows down. Core services inflation could prove more persistent, and
I hate it when they do this, where it's like they come right to the edge, but then like
headline inflation
all of a sudden nobody's interested in it. Like they're just leaning against the price.
Workers' bargaining power lead to more inflation down the road.
Who is that, Tom? Oh, you know what? I'm sorry. Your guys aren't supposed to hear that.
Probably no recession in winter. Sharp decrease in energy.
He is a member of the ECB. I know you would probably rather listen to him than me. But if you want to listen to him, you're going to have to pay for the Financial Juice subscription. I have an affiliate link in the video description below. And I love the service and I highly recommend it. That one is the one down there. Like, I have these things in the link that's like, oh, okay. If you're looking for this is a service I use that would be really useful to you. And I use it and I have the affiliate links in there. But the News Squawk is the one that like I'm actively pushing. Like, I don't think that enough retail traders out there are using a News Squawk, and I feel that it is an essential tool. So use that link, guys. Yeah, so you need to learn to keep your mouth shut when Seth forgets to mute it. Yes. Isn't that the truth? How it's so often that I will unmute that to play a video or something, and then I forget to mute it again. I'm surprised that people don't complain, because us talking over each other is probably really annoying. Okay, 1749 down tick, bid pulls. 5-year looks like they're gonna pierce new lows now. Well, they're touching the low at least. Yeah, offer's not strong enough yet. They might need the 10-year to breach first before the 5-year can do that. See this, I hate this. I think that they're gonna wait for like the bids to pull a little bit maybe before they like make some aggressive push. That they come down to it and it's like all somebody's got to do is hit it with 1,000 lot, and there could be some sort of stop run or something, and they don't do it, and then let 2 ticks back up. I hate that. It's the most annoying thing. But you know what they do, what the market maker will do is they'll go down to it. Nobody does it. They come back up, then they'll let it come back down, and they'll, like the market maker may be taking contract short and wanting to go short, and is bringing it back up just to kind of like that pause could maybe attract more orders, and then maybe they can bust it. Of course, they could be doing the same thing to the other side. Who knows? You think rates are going to shoot up? Well, I tell you what, the action this morning certainly does not speak favorable if you want lower interest rates, right? Yeah. I kind of feel like, well, I don't know. I'm totally sure. I think that maybe the Fed, is just, I have to assume that they're trying to be honest with us, right? But it sure feels to me in this situation that there's a strong risk of like us hiking well beyond 5% this year. I'm not sure if you're seeing that in the current data, but you can't see the S&P 500 rally like this and not that's going to cause inflation at some point, right? Like if you don't get the slowdown, then if you have rates, we've really pushed rates up high. I mean, like the speed with which we did it is a lot. Historically, a 5% interest rate isn't such a big deal, but like you go and look at housing, for instance, right? The housing market has just been absolutely decimated, right? So we have those high rates, and then the economy is not really hurt by it. How can that economy continue to go and you not get more inflation? Right? I just don't see how that works out. Yeah, you get in these down ticks where it doesn't take a whole lot, but there is a little bit pushing against it. It was 1463 that time. Like the initial down tick was not much, but then they tried bidding it back up and failed. But then you see at 08, like they don't pull per se. So like the seller is not ready to push it yet. And I don't know if there's like a meta order being executed here today. I'm not necessarily seeing that. I think this is more speculation today. Yeah, you're gonna need more than that. Okay, 1,000, that's better. $1,300, that's good. Now if we can just get somebody to hit it. Okay, well there's one. There you go. 2,000. It didn't stay offered though. You think we could test the December low? Maybe. On Friday, you were here on Friday, weren't you, Mr. M? On Friday, after I saw those numbers, I thought really strongly that we could test December lows, but as the day went on, I kind of moderated myself a little bit. So I'm not so sure now. Okay, there's new lows. Yep, and in the 5-year. And not quite in the 30-year, but... So... I'm not seeing it yet, but we're getting some hints of flattening here. It's we're flattened by like 2 ticks now on that breach of the lows. Okay, so key point to note here: Nick Timiraos tweeting, quoting President John Williams, who he had just interviewed. The Fed will watch the data to determine the path of rate rises. Maybe services prices stay elevated, and if that happens, we'll need higher rates. That was the quote that Nick Timiraos, the Fed whisperer, thought was important to highlight. And it's not like an outright hawkish statement, is it? But it does kind of hint ominously at possible hawkishness in the future, doesn't it? I live in Utah, so everybody here is Mormon. I'm Mormon, and one of the things in Mormon culture that you'll hear people talk about, because Mormons believe that we live in the latter days, which is like the days just before Christ comes again, and one of the warning signs that you are in the latter days is wars and rumors of wars. Right? So they use that. Yeah, Trading Bunny knows what I'm talking about, right? Wars and rumors of wars. So whenever I'm watching Fed policy these days, I kind of feel like we're in the era of rate hikes and rumors of rate hikes, you know? It's like they're not saying that they're going to do the rate hike, but kind of seems like that I mean, there's rumors of it at least. When has there not been wars and rumors of... I know, right? Well, especially in the modern era. Although I would say that before the whole Ukraine thing, we really did experience an unprecedented period of peace and prosperity. We really did. But that's kind of the thing, is that the Mormons believe that's exactly the way that it works, is that you have a period where you do really well, and then everybody gets prideful and, you know, too big for their britches, and then you have a recession. That's the way it works. Yeah, unless you're from Yemen. Well, no, I'm not saying that there was not any. Oh, hold on. We gotta fix Spotify here. We're not saying that there was not any kind of conflict or war anywhere on the planet or anything. We're just saying that, relatively speaking, compared to the past history, it was a lot less conflict than there has been in the past. And there wasn't conflicts among major powers in particular. So let's keep. You know, we were on a good streak until Russia, and now it's like, are we gonna have World War III? I sure hope not. Sometimes I'll look at that and I'm like, do I need to start stocking up on iodine pills? Like, FX Macro retweeted something, but the tweet has already been deleted. But he was saying, but Gary Gensler is worried that Bitcoin and Ethereum are manipulated. Well, of course they're manipulated. Man, 10,000 contracts have traded at 07. So, like, there's been some pretty good, strong absorption there at 07. But they're still hitting it hard. Fed's Cook says we have learned to not put too much weight on one data point. I don't know. I kind of feel like it would have been better if you had been quicker to notice the data points and start fighting inflation, you know? Maybe there are some situations where one data point can be, you know, just the first in a new trend. What do you think about buying natural gas? Why would you ask me about natural gas? Well, so right now I don't think that the seasonality makes much sense for a trade in natural gas. So of course natural gas like had this crazy spike and it was all wild and it died down very quickly. The Western powers were able to come in and fill that gap that was left by Russia and everything, and it was fine. Okay. Now you're starting to, I mean, you got to start thinking about spring, right? So natural gas demand is not going to be as high in the next 6 months, right? So if I want to take a trade in natural gas, you know, I'm probably thinking more like the end of the summer or in the fall. But even then, I'm not sure if we're going to get another spike in natural gas like that. I hope at least that the problem has been solved. That being said, it might be worth it to hold some sort of a position in there, and in the case where it you know, there's a fast spike, and if I got that spike like that, I might want to get into it. Right? So you say the EU needs to refill reserves? Okay. Well, maybe I haven't seen any research. It's kind of funny whenever we talk about something like this. Sometimes I wonder if Zero Hedge watches the stream. But then I'm like, if he watched the stream, then wouldn't they, you know, unblock me on Twitter? I don't know. Well, whenever I talk about things like this, it's all of a sudden it's like the exact report that we need to be able to make the decision on this subject comes up. But I haven't seen any research suggesting that there's going to be strong demand in the future for natural gas. Certainly there's a possibility for it. Yes, I'm so I'm pretty anti-Bitcoin, and one time Zero Hedge said something that was incorrect about Bitcoin and energy. You know, I was pointing out that Bitcoin still uses energy, so it doesn't matter if it's that you're using renewable energy, because that's renewable energy that could have been used for something productive. In the end, you're increasing the energy usage, and so their argument was nonsense. And I don't know, maybe they thought that I was part of some sort of bot campaign or something, but it was like I made comments on their Twitter that were popular too many times. You know, like I'd do it and they'd get like 20 or 30 likes, and so they blocked me. So I can't see Zero Hedge on Twitter. Which sucks, because they used to tweet useful stuff. I'm sure they still tweet useful stuff. And I still read the website a lot, but I'm not down on the Bitcoin thing, man. So I'm saying, like, so where are we at on our poll? Well, it's getting a little bit closer between why you suck at day trading and the problem with volume profile. I may still do the why you suck at day trading this weekend, just because I've kind of already prepared for that, and I think I want some more time to work on the volume profile one. But we're definitely going to do that volume profile one, because it sounds like you guys are really interested in it. Even though I feel like here on the stream, I've already told you guys many times the problem with volume profile. But maybe you guys just want it to be controversial. I don't know. But nobody wants to make the Bitcoin sucks video, because when I woke up this morning, that's all I wanted to do, was make a video about why Bitcoin sucks. We can hold off. Let's hold off and make a video about why Bitcoin sucks when like Bitcoin is all the rage again and stuff. VWAP. You know what? VWAP is VWAP is such a tough one, because my opinion of VWAP is that it is a really sound tool with really sound reasoning and everything behind it, but I think that it just became too overused and that the edge got sucked out of it. So I don't think that VWAP helps you too much anymore. That doesn't mean that it's not useful to have on your chart. It just means that like it's not necessarily going to provide an edge to you over the rest of the market. So this is why what happened, I've gone over this before, but what happened was VWAP was used by all of the big industry professionals to execute the large orders. They do a volume weighted or time weighted algorithm, and all of the traders caught on to it, and so all of a sudden their executions weren't being very efficient, and so they completely gave that up, and they started using stuff like Omgr and Chris. And they found that when they just timed their orders to have minimal impact on the order book, that they got better results than using the VWAP. So and that's why I would say that I don't feel that VWAP provides too much edge to you anymore. For some reason, I think I heard the yield curves are calculated using some... Oh, actually, that is kind of true. So, like the on-the-run benchmark rates, they do have to use like a volume-weighted price, because you don't always have a ton of volume trading through there. So if there's a situation where there hasn't been a lot of volume recently, and you know the trades are really far apart, then they have to take an average. But I think that generally speaking on that market, that's not that doesn't play too big of a part right now, because there's enough volume. Oh, Akshay says it's not just the yield curve. Everything that trades on the CME/CVOT gets settled to VWAP. Oh, that's interesting. I guess I had never read those parts of those other those other products, so I had never realized that. But again, like if you look at the 10-year treasury, right, like what the VWAP is at the end, it's pretty clear what it is. So it's not too different from what the closing price is. So if the market is moving, is there a way to avoid slippage? Nah, well, that's a tough question, man. There are definitely things that you can do about how you trade and so forth to avoid slippage. But it's not like you can perfectly avoid it or anything, you know. But there are periods of the market where you're more likely to get slippage and less likely to get slippage. Wow. So the market the S&P 500 just had a slip to the upside there. Yep, stop limits, but then you might not get filled. Exactly. Yeah. I tell you what, I've had situations in the E-mini where I got 10 points, 40 ticks of slippage on ES. Happens. But I think that the more useful thing is you know, to avoid, you don't want to be in a place where you have the stop set and it's sitting right there at your stop, and the market is kind of in a, you know, a scary spot, and it's moving around a lot and liquidity is pulling and so forth, right? You kind of have to just avoid those situations a little bit. If the market gets too crazy and I don't already have some profit built into the trade, then I just don't trade it, because it's not worth the risk. Even though I have a high probability trade, the volatility can make me not want to get in. Okay, we're just still getting, you know, some comments from the Fed speakers. I think that one was from ECB's not. Code Lounge, we just talked about that. Well, I guess you're gonna have to wait for the video that we put out in March about it. I'm gonna make a video about market profile and volume profile. Yeah, ECB is was just said that the biggest risk right now is not doing enough on rates, is what I just heard. So that's not going to help your treasuries there. Okay, so I'm still seeing very aggressive sellers clashing into large icebergs. That might be, I mean, they already kind of have a decent liquidity hole around 07.5. So that's a risk that we got to worry about. Market's moving. No, I don't think so. I think that so they kind of tend to move in they don't like to trade across the large range unless they feel that the liquidity is going to stay there. Does that make sense? So like if I'm the big trader and I'm selling this, okay, and I have to sell a ton of it, it really sucks if I hit 06.5 and I sell some at 06.5 and then it downticks and 06 immediately pulls so quickly that I'm not able to execute any orders at 06, for instance, right? They don't like doing that because they want to sell as high as they can, right? So they're only going to do that. They're only going to hit aggressively in that situation. Well, they're more likely to hit aggressive in that situation if either they've got something that really makes it like time dependent, or they think that those bids are going to hold, right? So that's why, if you get a move that's too far, then the market starts getting strained. Those bids start pulling, and so what happens is that the guy that's doing the big execution will back off and just let it sit in that range there, and it'll go back and forth for like 45 minutes. And by that point, all of the market makers are square again, and they're willing to put liquidity down again, and then he can start selling aggressively, right? So we're just in a point where we just had a little bit of some aggressive downside action, and now they're probably in rebalancing. But I would say that last little bit of orders was pretty aggressive, and they did push through a pretty big iceberg bid. Given your experience, I would like to know the percentage basis about the behavior of ZN between today and yesterday, which has the highest probability of occurrences. What happened yesterday is extremely unusual. What happened yesterday in the Treasuries was extremely unusual. So the first thing that I would say is like a really big swing both directions is very rare in the Treasuries. I shouldn't say very rare, but it's relatively rare. The S&P 500 does that all the time, but the Treasuries like to trend. The Treasuries like to trend. So to have a really, really aggressive move up and then a really, really aggressive move all the way back down past that only tends to happen during big news, right? I would say that the action yesterday was not unusual for news of that type, like when Chairman Powell is speaking, but overall, that's not typical behavior on your usual day, right? And what we're seeing here today, where it's just kind of like this slow and steady decline, and it keeps looking like it wants to revert back up, and then they just slump back down and they push a little bit more. It's like a train moving slowly downhill. You can't stop it, sort of a thing. No matter how much you try and push against it, that's the way the Treasuries usually go. That's why they're such a good instrument to watch and explain these stylized behaviors of order flow that we see. Because you're going to see this, like if you come and you look at the cumulative delta in ZN over here. So if you come and you look at on the right side of that chart, that second data series, okay? Like look at the cumulative delta. It's just down all day. It's just down all day. We were at 130. Now we're at negative 161. So 30,000 contracts of net selling, right? But at almost every point during this, right, you were getting like 7 tick pullbacks, probably things that made you think that it was about to reverse and turn back up and all of that sort of stuff, right? The market maker knows that the flow is to the downside, and so they adjust their offers and inject some randomness into it so that they can still make money, right? Yesterday was the most run-of-the-mill day in ZN. I don't know. That the problem that like I was saying, like most days are not like that, but it's not unusual for the news that we had, and we've certainly had volatile days with intraday reversals like that many times over the past 6 months, right? But I think that why he's asking this would probably be really useful to know, and would probably allow us to give a better because like, so here's the thing. Let's say you're doing back testing something and you have this algorithm and it's been working really well, and then yesterday you just got slaughtered, right? And you say, well, how normal is that? If it's somewhat rare, then maybe I don't need to worry about it, right? If that's the situation, I think you do need to worry about it, because those happen. They are quote unquote rare, but they happen more than enough to screw you up, right? It happens more than enough to screw you over time and time again. And the contracts executed, well, okay. let's try and look at this. Hold on a second. I have to add something to this chart over here to see. So like, it's exactly what happened to me, Seth, dude. So yeah, if it was like your algorithm got screwed up, I think you do need to worry about it. Yeah. Okay, so just coming over here and looking at range and volume. Okay. Oh, actually, there is something kind of interesting about today. So, or sorry, yesterday. So yesterday was actually below the average range that we've had. So it was actually below the average range that we've had. The amount of volume, I would say was high, but not like crazy. It was towards the higher end of the volume that we've had over the last few months, but it wasn't anything unusual in and of itself. But having that much volume relative to the more constricted range is a little bit unusual. So what I have here is I have average true, I have a range. That's what those gold bars are. And then I have ATR on top of that. That's what the white line is. And it's being measured. It's being measured by ticks. So like yesterday we had a 70 tick day. It's a decent range, but it's not a crazy range. You know, a crazy range is like double that. Right. But why should you be concerned about that? So the issue is that what I found on these sorts of things is that the fat tails are either like way bigger than you expect, or they're more common than you expect. So you kind of get this situation where you get this thing, it'll happen most of the time, but then when it doesn't happen, your strategy is absolutely effed, right? And I've had so many strategies where that's what happens. And it basically, it gets to the point where really, from a statistical perspective, I mean, this is the way that Nassim Taleb approaches it. Nassim Taleb says that it's better to just try and predict the fat tails, right? That he's looking for situations where the fat tail is like likely to happen, in fact, that he can actually predict the black swan or whatever the deal is, right? And that's a better trade because you make more money on those than you make on the normal times, right? So I think that this kind of is something that favors the discretionary approach that we talk about, right? Where we want to know what's going on and why it's moving, right? On it. Okay, so on a distribution curve, where does the tail start? I think I actually know the answer of this, but I haven't like done it or on a practical level. So the way that they kind of do these things, or the way that Taleb suggests that you do these things, is if you can actually get an equation for your curve, an equation to describe the curve instead of just, you know, the raw data that creates the curve. Okay, and now you can do some math on it, and you're looking for these inflection points. So there's going to be one inflection point where it changes from a concave curve to a convex curve, and for him, on tails at least, that's the place that he starts. I don't think that classically speaking that's where they where typical statistics that they say that the tail quote unquote starts, but in Taleb's book, that's what he talks about. So the head of the statistics department told me no one knows, and there are various ideas, but no one has a to me, Well, I don't know. Like here's the thing: is that like the tail as you experience it as a trader, it generally seems super extreme, right? It's going to be like you come in and you just try and make 4 points on the S&P 500, right? And then all of a sudden one day you lose 100 points. Like, how is that effing possible, right? If I'm making 4 points, why would I ever do more than lose maybe 4, maybe 8, maybe my losing day would be twice as much as my winning day, right? But like 100 points, like what? Like, that's crazy, right? It just seems like such a freak. That's why most retail traders, when they experience a quote unquote fat tail event, they dismiss it. They say, oh, well, that was just unusual market behavior, right? But I'm telling you, from doing lots of very thorough back testing, that those things happen more often than you think they do. Others use a 1.5 sigma as a cutoff. Yeah, so where the curve starts to flatten is that's the same as what I was saying, right? But the way that he's expressing it is, what is the convexity of that curve? And you're talking about when the convexity changes from positive to negative, right? Or negative to positive, or whichever way it is. But that would be the same as the curve starts to flatten. Well, we got about 30 minutes left, and we're kind of getting in the pullback here. Could be flatten could be more appropriate because your curve could be inverted from the get-go. So you're saying a curve where it wasn't like it wasn't like this at the top. It was just upside down the whole time. Okay. I could see that. I don't know how common those are in the work that we do. Damn, I'm looking at this like I don't think that I want to try and hold a position through the day again. But would have much preferred to take it off when it was $20, right? It also be upside down as well. Yeah. See, the issue that I've had, so like when I read Taleb's book, so it was basically like, if you can get an equation to describe the curve, that's better, right? It wasn't clear to me, even though he talked about it a little bit, it wasn't clear to me how to do that. That started to get into the math that was a little bit too sophisticated for me. So, because I would like to have an indicator, like I have that distribution profile indicator that, like, for the range, for instance, and I would love to have a feature of it that would tell you what the distribution is, and like what is the closest mathematical name for that kind of a distribution and whatnot, right? I think that would be really, really cool, but that's like way beyond me. Yeah, but I would need to go on about yeah, okay. Well, but this is what I think is so interesting about Taleb's work is that when you really go into it, what Taleb is saying is that the statistics that they typically teach you at a graduate level don't really help you in these situations. So like the typical measure of, he's basically saying the typical measure of kurtosis is not as useful when you get into a really fat-tailed distribution, right? So he has his own metric to measure the kurtosis of the thing, but it's a completely different kind of a metric. So I don't know. I don't know how. And you just in his book, in the technical inserto, he just says what it is. So there's no like data or anything on it provided, like how effective it is or anything like that. I worry about the statistical sides of things because I want to know more about statistics and stuff. And I'm kind of worried that I might be too old and my brain too crystallized to really ever become an expert on that stuff. I might know more than the layperson, and I might know a couple of things that'll be really, really useful to a beginning trader, but I don't know if I'll ever be as good at it as somebody that was actually like a graduate in math and statistics, right? And it kind of makes me sad because I'm like, I should have double majored in statistics. Darn. Market maker's squeezing me for all I got. I'm just gonna take the 10 because again, I don't want to hold it. And that's not my only day job. You guys ask me this like almost every day. I have a day job. I'm kind of tired of answering that question, to be honest. Joe is probably like, wow, that was like a really unnecessarily tart response. It's just a lot of people ask that question, and I feel that the looking for the person that's doing this full time and trying to follow them and stuff is the wrong way to go about it. Like that pursuit actually harms your development as a trader. Tried for about a year and you had problems with risk management. Okay. So I have a question for you guys, though. Well, a thought for you specifically, right? So sometimes you come in and you're like, oh, I shouldn't lose this much in a day, but you keep trading, and so your loss is like really big, right? And you say, I'll be fine as long as I just don't have that really crazy bad day, right? And then you get concerned about how big your account is and you stop trading it. Or maybe you blew the account, right? So then you stop trading, right? But what if that, you held to your risk management and all that, and you didn't lose too much of the account, and then you kept trading? How often would those kind of events happen and how often could they happen for you to remain profitable, right? Because what I think you're going to find, what I've found happens to traders is they'll go through that cycle. They do really, really, really well, and then they'll fail. And that will be like, they'll blow the account, they'll start over, right? And so they never get to experience this cycle of, well, you have that bad day, but it's just okay. So what do? Right? And when you get into that point, what you may actually find is the problem wasn't risk management. The problem was the strategy itself has a fat tail, right? That the strategy itself runs into a situation where it doesn't work very well, right? And it's a natural part of your strategy. And so unless you can find a way to identify those situations and turn those situations into places where you make a ton of money instead of losing a ton of money, unless you can do that, it's not actually a good strategy. That's what I've found. And I think that most retail traders never get to that point because they always just like restart the account. So for me, for instance, I had a really bad day on Wednesday last week, right? And one could say it was bad risk management. Like I definitely took a bigger loss than I should have, but it was still within my parameters. But then on Friday, I made a big winner. right? So if it had been me before I started trading micros, a bad day like that might have wiped me out, and I wouldn't be able to have traded on the Friday. I would have traded the Friday on sim, and then I would have been like, oh, I could have made it back, but I didn't, that sort of a thing, right? So it kind of like those things kind of matter. In fact, I think I can hold on a second. Sometimes you don't let your strategy work, it fails for a week or so, and then you change it up despite the back test, or it works for a few weeks, it doesn't work 1 week, and then you just move on, or not smart, or I would revenge trade. Well, yeah, so, but like that's kind of another issue, right? Is that if you're going to day trade, you kind of need a certain amount of consistency, right? You kind of need a certain amount of consistency. Otherwise, it doesn't make sense to day trade, because you can't handle like a 50% drawdown on your account. That's not very good. Oh, hold on. Maybe I need to go further back. I don't know. Oh, I guess not. 718. Okay. I'm going to show you my stats here. I kind of try and I don't want, there's certain like numbers and count numbers and stuff that I don't necessarily want to highlight on the screen per se. It's not like a huge deal if, no wait, I got 723. Oh, I said 623. 7. Looks like I could have gotten a much better price. I think I might have been able to get that 20 bucks if I had been a little bit more patient, but I really hate it when I'm like, I'm expecting to get out of a trade soon and it's starting to come back on me. And I know that like if I wait long enough, I might be able to get it back, but it's like it's more of an issue of time than it is about what it's actually going to do, It's super annoying. Okay, I don't know why it's not completely, I don't want this like this big flat area over here on this side, but it's not letting me get rid of it. But so like look at the way that it's been going, right? So like I had I had one winner that was just like absolutely massive, right? That really got me off to a good start. But like look, I've had periods where like I did really, really well, and then immediately afterwards I did really, really poorly, right? And in fact, since the end of October, I've kind of been having to like slowly claw my way back, right? And here you get this point where I lost. Oh, where is it? Should have been 2-3. Oh, that's not quite right. Why is it not showing? Am I actually not showing the right? No. I mean, I lost like $50 here, right? But then I made, or I think at one point it was $70, and then I made $50. And anyways, it looks good, doesn't it? I don't know if the stats are actually quite as good as I would like. So my winning trade percentage is still way lower than I'd like. I think it's saying that I take a lot of little scratches, right? Because 55 plus 39 is not 100. There's like a 5% bit in there that's not matching up. I don't know. But look at this. My winners definitely go further than my losers. And if anything, that MAE is actually probably a little bit elevated because, you know, there were trades that just went against me really quickly, you know. Otherwise, it would probably be more like average MAE of 10. Because if you look at like, well, so my largest loser, where does it say that? Average hold, longest hold time winner. Oh, right here. My largest winner was 160, but my largest losing trade was 83. See, that shouldn't be as much. In fact, I wouldn't even want it to be 47. I might lose 47 in a day, but not in an individual trade. But I think that those, oh, you know what it is? If I come in, maybe if I limit it to 10 years, because there was some trades in there that were like spreads and experiments and stuff. Oh, no, that's not it. 10Y. That's a little better. Well, still not it. I feel like it's not completely showing everything, but I don't know what the deal is. Can't explain it. Start ZT. I don't know if I really want to. So like, I think I have to consider two things, right? One thing is, you know, maybe I could trade ZT and make some money on it. I don't know if the actual, like the way the ZT moves and stuff would actually be favorable to the way that I trade, actually. I'm not sure, but I guess I don't watch CT enough to say that. I'm just saying that's kind of like one of the biggest concerns that holds me back, I guess. Is the concern is I'm worried that the things that give me edge in the 10-year would not give me edge in the 2-year, right? But then the other side of it is I do this publicly now, right? So it wouldn't be a very good thing if I started trading the 2-year and that, you know, less people were learning from it because of that, right? Because I'm not sure if the 2-year is appropriate for a large group of people. Really, the thing that's most appropriate for a retail trader to trade is the 10-year, if you have a large enough account, right? Or TN, ultra 10-year. The 10-year or the ultra 10-year. So really for a lot of beginners, I really think that the micro treasuries is more appropriate. And I don't want to come over, because I could start trading all sorts of esoteric stuff and like taking big trades and going and trying to find big option trades and all of these sorts of things. But you know, that wouldn't help the audience. When I'm trying to explain the stylized behavior of markets and how we can kind of craft a trading strategy to take advantage of those well in an informed strategy, it's just so much easier for me to do that in the 10-year. Whereas in the 2-year, when it's like, you know, stuff kind of just comes and goes and it's really slow and stuff, I'm not sure that, I don't think that those kind of behaviors would be as apparent to people. In the 10-year, it's really clearly visible. I hope that if anybody that's like really watching this, and I don't just mean like you're trading by the side, but like I know there are some guys that like they'll come and watch the replay and like really laser focus on what's going on in the DOM and stuff. I hope that as I'm describing these things happen, you can kind of see it in the DOM, and you kind of get into this spot where I feel that I am, where, you know, you can kind of tell the moves that are really being driven by real volume and stuff coming in versus kind of the the noise that the market maker puts into the market to screw you up, right? There probably are some other things about the 2-year that if I watched it that I would learn that I'm not learning from the 2-year, though. That's probably true for sure. And I guess the thing is that if I got to the point where I felt like I was so good and I had proven myself on the 10 years so well that I was like absolutely bored with it, then maybe we'd do that. Right now, though, I feel like I've got something really good going. I think that I've had some foibles, you know, a little bit. There was some declines and so forth that I wasn't happy about. Some mistakes that I wasn't happy about, and I'm not happy that I'm not always beating out the data fees. So my goal is to beat out the data fees. So really, to be where my goal is, I'd want to have about $120 more in the account right now. So I think we still got work to do, but I sure like just looking at those stats just now, because that's the first time I've looked at it in a while. That looked really good, didn't it? That was pretty. I was impressed with myself. Somebody else showed me those sets, I'd be like, oh, yeah, you look like you're on a pretty good track. Why don't you use your strategy in NQ? Well, so the issue with trading it on the indexes is that, again, we're kind of coming in and we're using information that we know about the markets to kind of predict future orders. And so I can predict here that because of the numbers that we're getting and the situation and so forth, that interest rates are going to rise a little bit, and they did right after that non-farms report. And so we can use that right now. I'm not saying that you can't find those opportunities in NQ. You certainly can, but I personally have found it very, very difficult to do. Maybe if we went back, maybe now that we've gotten as good at it in the treasuries as we have, maybe we could turn around and do it in the equities and do really well at it. I think that if I was going to do it in the equity indexes, that I would have to focus a lot more on options, and I would probably have to start paying for a service that gives me this kind of options information, because that's having such a strong impact on what's going on right now that I just have to, you know. And the other issue with NQ is that you have to put on more risk to do it, and it's super fast, and I like something that's a little bit slower and methodical and where I can actually think out what I'm doing, right? So I'm not saying that you can't do it in NQ, but it was hard for me. Making sure you have a heart monitor probably would make me really nervous. NQ Dom is like a video game with dual winners. Yeah. The other thing that I would say about NQ is that the reason why most retail traders are attracted to NQ is because it's the most volatile and it's like the most leverage. So when you look at how much money can I make if I traded X, and how much money do I have? And when they start doing all of that math, the one that works the best, that they make the most from, and that they have the best chances of being able to make a living from it, it's NQ, right? And what I don't think that the beginner realizes when they make that decision is that all of that works against you when you're losing too. And really the thing that's hardest is like making money is easy. To some extent, you're gonna get lucky. And you're going to have these times when it moves. And I tell you what, when you catch a winner and you're already in it, and so you have all of this profit built into it, you can just let it ride. It's like the easiest trade in the world, right? The hard thing is keeping it. And it's so much harder to keep it in NQ than it is like in ZN. in ZN, if I'm not on, I can just quit at any point. And usually the situations where I really lost large amounts of money were because I really broke my parameters. Right? I traded way more than I should have that day. So almost always the case where those bad days I have tons of trades trying to make it back. So, all right, guys, it is time for me to get going. What should we put down for today's title? Well, the poll came in a little bit closer than it was, but it's still 4156 in favor of the volume profile. So I don't know if I'm going to be able to make that one next, but it will definitely be in for March, and I'll start preparing the content for it. But I think I want to do a couple, I did these back tests in the past, but I'd want to make them super clean and everything for people so you could see them, run them on more recent data and all that sort of thing. But that could be the March video. I think I might still do why you suck at day trading. Hopefully next week, although I need to do some more writing. So, title. Slow. Let's say Treasuries continue slow march down. Mid-Fed speakers. Continue march down. Continue downtrend mid-Fed speakers. Let's say. Don't get giggy on your own supply. Put title as title. All right, I gotta get going. I'll see you guys tomorrow. Stay excellent, team.